It is 10:21 a.m. Pacific Daylight Time. It's the 22nd day of April, 2026. And this is episode 1305 of Bitcoin. And yet another DeFi protocol has lost millions. You know, if they had just listened to us when we told them Bitcoin, stop shitcoining, they probably should have listened to us, but they didn't. And now people are losing millions of dollars every single day on DeFi because of exploits and hacks and everything under the sun. And I guarantee you this is all because people that didn't really never know how to code, but have a couple of evil bones in their body, got a hold of AI and said, hey, look at this code on GitHub and tell me how to exploit it. And that's exactly what the hell's going on. After that, we're going to talk about a top U.S. Pacific commander calling Bitcoin a valuable computer science tool. All right, there's a lot of people that are like taking this a little too far, saying, look, even the United States military likes Bitcoin. Well, we'll get into the story and we'll see what we can see there. And then we're going to talk about DoorDash and stablecoin. You knew it was going to happen. You knew it was going to happen. And here it is. We'll do it. I promise we'll talk about it. Then Kraken filed a lot of crypto tax forms for the year 2025 to the IRS, and it's probably not what the IRS wanted to see, at least the volume. And it's funny. Second part of show. A16Z crypto-backed Gensyn has launched an oracle. They say it's not a prediction market. We'll see. But what prediction markets that we do know about, Kalshi and Polymarket, they're racing to open perpetual futures in crypto land. So we'll see what that's going to look like. And then New York is suing Coinbase and Gemini because of prediction markets. And then to round us up, we've got Sullivan and Cromwell? Yeah, Sullivan and Cromwell law firm pulling a huge mea culpa for AI hallucinations. Yeah, nobody is exempt from this, man. Okay. So, another DeFi protocol loses millions in a hack just days after the Kelp DAO breach. Woo, Omkar Godboll writing from CoinDesk. Another day, another exploit. The security crisis in blockchain-based decentralized finance, or DeFi, once touted as a challenger to legacy infrastructure, is only getting worse. The latest victim is the Volo protocol, a platform built on the Sui blockchain where users deposit assets into, wait for it, yield-generating vaults, which functions as pooled investments. Deposited tokens such as Bitcoin, stablecoin, and tokenized assets are deployed using various on-chain strategies to generate yield. Early Wednesday, the protocol confirmed a security breach that drained a total of $3.5 million of digital assets from 3 of the vaults. Assets locked in other vaults were not affected. Quote, the $28 million in TVL across all other Volo vaults are safe. The exploit was isolated to 3 specific vaults, and we have confirmed no shared attack vector exists with the remaining vaults, the protocol said, adding that it is prepared to absorb the financial loss rather than pass it on to users. The attack hit vaults holding wrapped Bitcoin, or WBTC, Matrodox tokenized gold token, XAUM, and the dollar-pegged stablecoin USDC. In response, the protocol froze all vaults and began working with the Sui Foundation and on-chain investigators to contain the damage and trace funds. Since the incident, Volo has frozen $500,000 in assets through coordination with ecosystem partners, meaning those funds have been immobilized on-chain to prevent any movement or withdrawal. Still, the majority of the stolen funds remains under investigation. The breach adds to a growing unease across decentralized finance, where a string of exploits has raised questions about smart contract security and protocol oversight. The timing is particularly sensitive, coming just days after the weekend's Kelp DAO exploit, in which an attacker drained millions by artificially minting unbacked liquid restaking tokens, or RSETH. And I'm pausing here to add, they're not mentioning the Drift protocol, which came right before the Kelp DAO protocol incident. Right? This is just one after another, after another, after another. The aftermath has rippled across the DeFi, triggering collateral damage in multiple protocols, including leading lending platform Aave, where users rushed to withdraw funds because of the heightened uncertainty. To date, DeFi has suffered $7.78 billion in hacks, according to data from DeFi Llama. Bridge protocols account for another $2.9 billion in losses, and combined, the figure exceeds $10 billion, roughly equivalent to the market capitalization of cryptocurrencies ranked between the 10th and 15th globally. Volo said it will publish a full postmortem once its investigation is complete and remediation steps are finalized. But for DeFi users and investors, a broader pattern is becoming harder to ignore. While institutional adoption is accelerating, relatively little of that capital appears to be flowing into improving security, with exploits continuing to arrive in clusters. I said it when I was talking about Drift. I said it when I was talking about Kelp. I'll say it now that I'm talking about Volo. If you have anything to do with DeFi, pull your shit out, buy Bitcoin, and hold your own private keys. It's not that hard. It really isn't. It certainly isn't any harder than getting into figuring out how to operate Drift and Kelp and Volo and SushiSwap and all the rest of this garbage that we find ourselves continuously inundated with. But let's go to the Pacific. Take a nice little cruise. Top U.S. Pacific commander calls Bitcoin a valuable computer science tool for national power and security. Micah Zimmerman, writing for Bitcoin Magazine. Admiral Samuel Paparo, who is the commander of the United States Indo-Pacific Command, told the Senate Armed Services Committee Tuesday that Bitcoin represents a valuable computer science tool as power projection, offering a rare and notable endorsement of the cryptocurrency from one of the nation's most senior military officers. The comments come during a FY 2027 defense authorization hearing April 21st, 2026, when Senator Tommy Tuberville pressed Admiral Paparo on whether Bitcoin leadership gives the United States an edge against China in the Indo-Pacific theater. Quote, Bitcoin is a reality, the Admiral told the committee. It's a peer-to-peer, zero trust transfer of value. Anything that supports all instruments of national power for the United States of America is to the good, end quote. He added that IndoPACCOM's research into Bitcoin centers on its underlying computer science architecture, the fusion of cryptography, blockchain, and proof-of-work protocols, and that those protocols impose more cost than just securing networks, extending to offensive and defensive cyber operations. Quote, Bitcoin shows incredible potential as a computer science tool, the Admiral said. It's a valuable computer science tool as a power projection, he later said. The testimony is notable for its framing. Paparo did not describe Bitcoin as a speculative asset, nor as a financial instrument. He described it as a computer science system with direct cybersecurity applications, an argument with precedent in defense circles. Space Force Major Jason Lowry, a National Defense Fellow at MIT, has spent years arguing that Bitcoin's proof-of-work mechanism can deter cyber attacks by imposing physical, energy-based costs on adversaries, analogous to how conventional military assets deter physical aggression. Tuberville's line of questioning drew a direct line between BTC strategy and great power competition. The Alabama senator noted that the Chinese Communist Party's main monetary think tank published research last year examining Bitcoin as a strategic asset. China's International Monetary Institute circulated a report titled, quote, "The Case for Bitcoin as a Reserve Asset," end quote, with commentary noting that Bitcoin is shifting from speculative investment to a real strategic reserve consideration, a signal that Beijing is watching U.S. moves. President Trump signed the executive order establishing the Strategic Bitcoin Reserve March 6, 2025, and they talk about it like it's a real thing. Dude, until you buy some actual freaking Bitcoin and shove it in there, it is a pipe dream right now. Pipe dream. We keep talking about it like it's a thing, but it still has yet to be made into law through the Congress. Even though it's an executive order, I get that part, but it needs to be canonized. It needs to be written down. It needs to be passed by the House and then by the Senate, or depending on where it originates, by the Senate and then the House. And then it needs to go to the desk of the president and it needs to be signed into freaking law. Until that time, for me, the Strategic Bitcoin Reserve is simply, I don't know, a nice little Christmas ornament that we can look at and go, oh, isn't that nice? But Tuberville co-sponsored the Bitcoin Act alongside Senator Cynthia Lummis in March 2025. And that would go further by directing the Treasury to actually physically acquire 1 million Bitcoin over time, mirroring the scale of U.S. gold reserves, if we actually have any. I still don't believe that we have it. Anyway, Paparo did not offer specific legislative recommendations during the open session, saying he preferred to go on record in writing and dive deeper into a classified setting. So a lot of people are making a big deal about this, that the United States military loves Bitcoin. I don't really recognize the admiral saying that it is a tool for power projection, meaning that we love Bitcoin. It's not a terrible take, but I think we should kind of, cool our heels a little bit in thinking that this means the United States military is embracing Bitcoin. We'll have to wait and see. It is always a wait and see situation. Like I said, it's not terrible that he said this about Bitcoin, but let's calm ourselves down just a little bit. On to DoorDash. If you're still using it for whatever reason, you know what? I've got to do this. Learn how to cook. Please. Learn how to cook. Start. Here's how you learn how to cook. Get a pan. Something you can put on the stove. Preferably made out of some kind of metal. Right? Fill it full of water to about 2/3 of the way full and turn the burner up on high and let the water come to a boil. Congratulations. That's your first cooking lesson. How to boil water. I know it sounds dumb, but one of my favorite cooking shows of all time, I can't remember the name of it right now. Oh, Good Eats. Yeah, Good Eats. That was an awesome show. The pilot episode that he used to sell that entire series to Food Network was literally instructions on how to boil water, because that's what he was trying to do. He was trying to get people to learn how to cook, not like Emeril Lagasse, not like a high-minded 5-star Michelin chef or anything like that. Just literally, here's a standard kitchen. Here's your standard guy with a standard set of tools. And here's how you cook, a chicken breast. Learn how to cook and stop spending your money at Taco Bell and then spending even more money to have it driven to you. Get in your car, go to the store, buy some things, and learn how to cook. You've got Zap Cooking, or was it Zap.cooking? It's on Nostr. Just type in Zap and cooking, and I guarantee you'll find either Zap.cooking or Zap Cooking or whatever it is. Find a recipe that has chicken breasts in it. Go get the ingredients. Read the instructions. Learn how to cook at home. It's a really important skill. The amount of people that I know that have great kitchens that have yet to actually use it other than a microwave or heating up, a pan of water to make ramen there's a lot. There's a lot. They have these great kitchens, never use them. Except the most fundamental things like heating up bagel bites in an oven. Right? Learn how to cook. Do you have a stove? Do you got an oven? Then you can cook. I'm just saying, man, because this DoorDash shit is just ridiculous. But I digress. DoorDash to offer stablecoin payments to users via Tempo blockchain. DoorDash plans to offer its users, which are called Dashers, and merchants, the option to use stablecoins in their transactions with the food delivery app, according to Tempo blockchain. In a Tuesday notice, Tempo said that together with DoorDash, it was building stablecoin-powered payment infrastructure in a move for its delivery drivers, also known as Dashers. Okay, there you go. Merchants and users to settle transactions using digital currency. The blockchain cited payout speed, lower cost. The blockchain. Hold on. That threw me for a loop, and I'm getting my shit back together. The blockchain, named Tempo, cited payout speed, lower cross-border cost, and transaction flexibility in its reasons for the integration, expected to apply to users in more than 40 countries. Lower cross-border cost. What? Am I literally in? Okay, let's say I'm in Europe. Am I really going to call DoorDash and get somebody to go to Latvia to come back over the border? I don't understand why they need lower cross-border cost for DoorDash. I don't know, man. I'm starting to smell a little bit of bullshit here. Quote, if we can get merchants and Dashers their money faster and do that in a way that's affordable to them, well, that's a no-brainer for the entire ecosystem, said DoorDash co-founder Andrew Wang. Tempo announced the DoorDash integration as part of a larger move into stablecoins, along with payment platform Stripe, investment firm Paradigm, and coastal bank and fintech company Arc. While the delivery app previously announced moves into AI. Woo! The stablecoin infrastructure would represent a significantly large delivery app onboarding a digital asset payment rail for everyday settlements. In February, DoorDash reported that it delivered 903 million orders in the fourth quarter of 2025 at a total value of $29.7 billion. The delivery platform is slated to report Q1 2026 results May the 6th. In addition to its work with Tempo, Stripe agreed to purchase the stablecoin platform Bridge as part of a $1.1 billion deal in 2024. Traditional credit card companies, including Visa and MasterCard, have reached similar agreements moving closer to stablecoin. MasterCard agreed in March to buy stablecoin infrastructure company BVNK for a reported $1.8 billion, while Visa expanded its own stablecoin settlement platform in July to support additional stablecoin. That's the end of the article. I had no idea that DoorDash is using AI. I can only think that means they're trying to figure out shorter routes from the restaurant or food service place to the customer's door. I don't know. Let's just do AI, right? I mean, it's a little ridiculous. I'm sorry. I've got to cleanse my mind out of that stupid shit. Handmade tallow soap from my friend Soap Miner over at soapminer.com. Soapminer.com. You will find handmade tallow soap. It's 100% grass-fed beef tallow as the base. There's distilled water and there's lye. Now, on top of that, that's just the base soap that Soap Miner makes for all of his soaps. He'll add stuff like cedarwood essential oil to give you cedarwood tallow soap. He's got pine tar tallow, goat's milk tallow, lemongrass, orange clove, lavender And, tea tree, peppermint, Earl Grey. Earl Grey is one of my very favorites alongside cedarwood. Those two have been my favorite bars of soap. And also redacted tallow because it's got pure carbon added to the mix. All of this stuff is handmade. He has the best soap I've ever used in my entire life. I got a family of 4 with 2 kids, and 1 bar of soap lasts us about a month. That is a long time for a bar of soap to last for a family of 4. So this is the highest quality soap I have ever used, and it gets your hands not only squeaky clean, that tallow softens your skin. And there's a lot of people that never use lotion on their skin. Sad, it's the largest organ of your body, and you should probably keep it rather hydrated, but most of us do not. If you're using Soap Miner brand soap, you are, because it's giving you that nourishment that your skin craves alongside getting everything nice and squeaky clean. Make sure you use the code Bitcoin and to get a 10% off on your price. Use Bitcoin and as the coupon code. Get 10% off of everything at Soap Miner at soapminer.com. Kraken filed 56 million tax forms for the year 2025, and 1/3 of those had a balance of $1. I want my $1. Francisco Rodriguez, writing for CoinDesk. Crypto exchange Kraken says that it filed 56 million crypto transaction forms with the U.S. Internal Revenue Service for the 2025 tax year. Roughly 18.5 million of those covered transactions that were worth less than $1, and over half of them were worth $10 or less. Only 8.5% of the newly introduced Form 1099 DAs cleared $600, the threshold that triggers reporting for non-employee compensation, and 74% were for less than $50, the company said in a Wednesday's blog report. Each form is also sent to the customer and creates a reconciliation task for the taxpayer who receives it, and on top of that, standard tax software does not handle crypto transactions. Kraken estimated that the additional burden on an active crypto holder at $250 to $500 a year for dedicated tax software on top of standard filing costs. Quote, the hours taxpayers spend reconciling these microtransactions, often with incomplete data, generate costs wildly disproportionate to any revenue the IRS will collect from them, Kraken said. The Tax Foundation estimates individual returns already cost Americans a combined $146 billion in time and expense, the exchange said. And the National Taxpayers Union Foundation put the average time for non-business filers at about 13 hours and $290 per return. Brokers reporting for 2025 provide gross proceeds without cost basis, meaning the form shows what was sold but not what it was bought for. Kraken said it filed thousands of client questions about forms that captured only one side of the calculation. Kraken pointed to 2 parts of the tax code that causes problems. One is the lack of a de minimis or low-level exemption for crypto payments, which means even small purchases with crypto can trigger a taxable event that needs to be declared. Quote, imagine you walk into a Steak and Shake and you pay for a $7.99 meal with Bitcoin through a payment app. You have triggered a taxable event. You are technically required to look up the cost basis of the specific Bitcoin you spent, calculate whether you had a gain or loss on that fraction of a coin, and report it on Form 8949. That's the same argument libertarian think tank Cato Institute recently made. According to the Institute, buying a cup of coffee every day with BTC can result in over 100 pages of tax filings. The second issue is staking. Rewards earned on staked assets are treated as ordinary income at the moment of receipt based on the token's market price that day. Well, yeah, pausing to say what time of day that day. Anyway, most holders keep those tokens instead of selling them, meaning that they owe tax on tokens that they haven't sold. If the token price falls between receipt and filing, the tax can exceed the asset's current value. Kraken calls this phantom income and says a large share of the sub-dollar 1099 DAs is issued, or hold on. Kraken says it calls it phantom income and says a large share of the sub-dollar 1099 DAs that it issued were staking distributions. Legislation moving through Congress includes a de minimis provision, but is limited to stablecoin. Kraken is pushing for a broader inflation-indexed exemption paired with anti-abuse guardrails to prevent structuring. The exchange is also asking Congress to let taxpayers elect when staking rewards are taxed, either at receipt under current rules or at sale when a gain is lost or realized. Kraken says its systems and those of other exchanges already support both reporting methods, but the choice needs to actually be authorized. Wow, that's going to suck for everybody, but it's also going to suck directly for the IRS because 56 million 1099 DAs in the United States alone. Think about that. If each one of those is for a separate person, because I don't see why you would issue two 1099 DAs to the same person. Now, you could if that same person has two different accounts with Kraken. So, but I'm going to say that that's not the general case. 56 million people in the United States were actively in crypto at the time in 2025. There's 320 million people in the United States. This is 1/6 of the population of the United States was actively staking, holding, buying, selling some form of cryptocurrency or stablecoin. That's the number that really blows my mind here. 56 million Americans. And the kids aren't doing it, so you can subtract that shit out of the total population. And now it looks like it's more around 1/5, maybe getting into 1/4 of the United States population. If I've got this wrong, if you're a tax guy out there and I've got this wrong in that it's very, very common for one individual to get several 1099 digital asset forms to file with the IRS, please let me know, because I don't see how that would work. It doesn't make any sense. The 1099 is supposed to be your activity on Kraken. And think about it this way. That's just Kraken. How many tax forms total? How many did Coinbase file? How many did any other United States-based, how many did Circle file? And what kind of reporting needs to be done by prediction markets like Kalshi and Polymarket? If you want to bet, what is that form? I don't know if the IRS is actually equipped or even staffed to a point where they can handle this, which is why they're going to turn to AI. But even then, how much are they going to spend on all that compute? I don't know, man. I think it's at this point, even the IRS themselves may actually ask Congress, please give us a de minimis so that we don't have to rifle through this shit. It may actually come from the IRS that we get a de minimis after they have been flooded. Because if Kraken themselves gave them, 56 million forms, holy shit. Think about all the other companies. I'll bet you that sometime this year, we hear the very first peep out of somebody high up in the IRS that at least suggests that the IRS's life would be made much easier with the de minimis exemption on crypto. Let's run the numbers. CNBC, futures and commodities, which is telling me that Trump's extension of the ceasefire for Iran isn't doing something that it's supposed to do, because all the energy is in the green today by several percentage points. Brent North Sea is up 3.25% to 101.71. West Texas Intermediate May contracts 3.67% to the upside, 92.96 a barrel. Natural gas is up a full point to $2.72 per thousand, and gasoline is up 4.41%, back to $3.35 a gallon you go. Murban crude trading up 4.8% to 199. And all the metals are in the green. Palladium is up 1.5%. Gold is up 0.76 to 47.55 and 3 dimes. Platinum is up 2.5%, and silver is up 1.82 to 77.88 per ounce, and copper is up 2.25. Ag is mostly green today. The biggest winner is chocolate, 2.9% to the upside. Biggest loser is cotton, almost 3 points to the downside. Live cattle trading down 0.5, lean hogs trading down 0.5. Feeder cattle down 1/3. The S&P is up almost a point. NASDAQ is up 1.5 points, and the Dow is up 1/2 point. S&P Mini is the only thing in the red. It is down by 0.46%. Bitcoin chilling at just below $79,000 a coin. That's a $1.58 trillion market cap, and now we can get 16.7 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,019,185 and 1/2 of. Average fees per block remain at 0.02 BTC, and there looks to be about 42 blocks carrying 81,000 unconfirmed transactions. Wow, waiting to clear at high priority rates of 10, double digit, 10 sats per VByte. Low priority is going to get you in at 6. A lot of volume going on right now. And hash rate, what are we doing? 977 exahashes per second is the hash rate of the Bitcoin network at this time. From You Have the Con, yesterday's episode of Bitcoin, and Nick Dose with 196 says cheers, right back at you. Noster Gang with 101 says nothing. That's all I got. So if you got some time on your hands, give me a 5-star review over on Apple or Spotify. You can just go to the show notes. I have direct links to the actual show in the 4 major platforms. That'd be YouTube, Amazon Music, Spotify, and Apple Podcasts. Give me a 5-star review. It really helps. And it don't cost you nothing but time. And I do respect your time. So I'm not saying that, it's all that easy, but I am trying to make it at least as friction-free as possible by giving you direct links in the show notes of every episode that I do now, so that if you don't have the sats or you don't want to part with them, if you can part with your time, I'd appreciate it. And go over there and give me 5-star reviews on all of those puppy dogs, because it really does help. That's the weather report. Welcome to part 2 of the news that you can use. A16Z crypto-backed Gensyn launches Delphi, an artificial intelligence settled information markets platform. So not a prediction market, an information market. Let's see what this is all about. And it's written by Yogita Khatri out of theblock.co. Gensyn, a decentralized artificial intelligence infrastructure network backed by A16Z Crypto and others, has launched its flagship product, Delphi, an AI-settled information markets platform aimed at opening a new category of niche creator-owned markets. Quote, "These are not prediction markets. They are information markets," Gensyn said on Wednesday. Quote, "Once a market is live, no single centralized entity controls it. Outcomes are settled by artificial intelligence with revenue distributed to the creator automatically via USDC, end quote. Gensyn argues that existing prediction market platforms such as Polymarket and Kalshi are limited by some centralized control, as they decide which markets get listed, how outcomes are resolved, and who can participate. It also said creators who build audiences around niche topics are not compensated despite contributing specialized knowledge that can increase market value. Quote, Delphi isn't directly competing with Polymarket and Kalshi for the same markets, Gensyn co-founder and CEO Ben Fielding told The Block. Quote, the strategy is to open up an entirely new category of niche, creator-owned markets that those platforms would never build. The long tail is the point, end quote. Fielding said the model could also expand access to AI development by making information publicly available for training, similar to how the internet democratized publishing. Quote, long-term, information markets like Delphi will be the driver for autonomous machine learning, with models training over decentralized resources like GPU compute, data, information, etc., and improving against a clear objective of real-world value accrual from information trading, he said. Delphi is built on Gensyn's decentralized AI infrastructure network, which operates as a layer 2 network on Ethereum using the OP stack. What could possibly go wrong? The platform settles markets using AI and what Gensyn describes as, quote, verifiable intelligent oracles, not insiders, end quote. Rather than a human or company deciding outcomes, the market creator selects an AI model up front before the market is created, Fielding explained. The model's weights are fixed at that point, so they cannot be changed later, he said. Anyone can rerun the model's reasoning to verify results using Gensyn's proprietary, quote, reproducible execution environment technology. Yeah. Again, I ask, what could possibly go wrong? It's supposed to ensure identical outputs across different hardware setups, including GPUs, CPUs, and data centers, Fielding noted, quote, using REE, or reproducible execution environments, machine learning decisions can be fully audited and verified, he said. Gensyn said that Delphi has already recorded, quote, millions in trading volume during its testnet phase, which began last December. The platform is now launching with an invite-only model for market creators, while trading will be open to all users. The creator whitelist will expand over time until the platform becomes fully open and automated. And Fielding added that a mainnet launch is expected in the coming weeks. Here's the rub. Gensyn's economic model is built around its native, yet to be launched AI token, which serves as the core token across its ecosystem, including Delphi. The protocol charges a 0.5% fee on all volume, which will be used to buy the AI token and burn a portion of it, creating a mechanism for value accrual across the network, Fielding said. I smell bullshit. Quote, as a machine learning scales across the network and trades information, this fee will continue to scale with it, creating a flywheel of network value accrual based on open source and permissionless AI progress, he said. As for creator income, Fielding said creators earn a 1.5% fee on total trading volume if the market settles successfully. Quote, this is equivalent to their payment for posing a valuable and interesting question that aggregated genuine information, i.e. trading signals, he said. Meanwhile, participants receive a multiple on their trade if their information is correct and lose their stake if their information is incorrect, Fielding said. He declined to comment on the AI token launch timeline. Polymarket and Kalshi are already huge players with billions of dollars in monthly trading volume, and when asked how Delphi plans to attract users and liquidity, Fielding said that the 1.5% fee paid to creators in USDC is a, quote, genuine revenue stream, not just an engagement tool, end quote. On liquidity, he said the initial market structure is designed to be self-balancing without external market makers. For more complex markets, Delphi is in discussions with liquidity providers, he added. Gensyn is backed by notable investors including A16 Crypto, Galaxy Digital, and Coin Fund, and has raised over $78 million in total funding since its founding in 2020. Most recently, the Gensyn Foundation raised $16.1 million in commitments and another $11.7 million in proceeds after refunds through an AI token sale in December. Earlier in October, Gensyn raised $16.7 million in a venture fund led by A16Z Crypto, valuing the network at roughly $1 billion fully diluted. In 2023, Gensyn raised $43 million in a Series A round, which was led by A16Z Crypto and previously raised over $7 million in seed and pre-round funds. Quote, here's the future we'd like to see. AI models purchase information from humans to get smarter, and humans get better predictions because AI contributes too. It becomes a self-reinforcing open ecosystem. It's more of a public utility than a private entity, Gensyn said. And I still don't know what this fucking thing does. Do you? I mean, what is it? What am I going to provide it? What information am I going to provide it that can be wrong? And who's betting on it? Okay, let's say I go over to Delphi, I make an account or do whatever it is that I do, and I decide to make a market, and I put up my free Comfrey manual, which you can get at bitcoinandshow.com. That's bitcoinandshow.com. Just give me your email, and you'll get you'll get access to my free Comfrey manual on how to get it, how to propagate it, what you can do with it. And so let's say that I give it that. That's the information that I'm giving it. I presume, I don't really know, but I'm going to make a presumption here that that's the information that I give it. Does this mean that now that this market is up, hey, here's what Comfrey does, here's how you propagate it, and here's what it is? Who's betting that it's wrong? And how do we prove that the information there is wrong? Against what's it being matched up to prove that it's wrong? I don't know, man. There's something about this that smells kind of fishy. And the reason it smells honestly fishy is because they're using their own AI token. And it smacks of, here's our shitcoin. Or rather, we like Bitcoin, buy our shitcoin. We spun it up out of thin air. Yeah, I mean, if I don't know, man, there's something about this is not sitting right with me. And it's a couple of things. One, they're spinning up their own native AI token that you got to buy. And two, there's not really a very good description of exactly what an information market is. I'm sure that I've got 3 brain cells left after, being a teenager and going to college and shit like that. And I understand that I may just be too stupid to understand this. So if you understand what the hell's going on here, feel free to get a hold of me on Nostr and let me know what the hell an information market is, because honestly, some of this just smells like a heap of bullshit. Now, Kalshi and Polymarket, now they're entering crypto race to launch perpetual futures. This should be fun. Micah Zimmerman, Bitcoin Magazine. 2 of the largest prediction markets in the United States are set to enter the crypto derivative space within days of each other, marking a shift in how these platforms compete for traders. Kalshi, the CFTC regulated prediction market, will launch cryptocurrency perpetual futures April the 27th in New York City. The company teased the product under the code name Timeless, a name that maps onto the contract's core feature, no expiration date. CEO Tarek Mansour revealed the launch date through a cryptic LinkedIn video featuring a rotating torus shape Bitcoin and several other cryptocurrencies are expected to launch with US dollars as the initial accepted collateral. Hours before that announcement spread across crypto media, April the 21st, rival Polymarket made its own move. The platform, valued at $9 billion, announced the launch of perpetual futures trading today on X, letting users go long or short on prediction market outcomes around the clock without waiting for event contracts to expire. The timing was not coincidental. Polymarket framed its product as a way to go long or go short the markets that you know 24/7 in a direct bid to establish a position before Kalshi's April 27th event. Now, the mechanics of perpetual futures differs from standard event contracts. Traders can hold positions on asset prices without owning the underlying token, and a funding rate keeps the contract price aligned with spot markets. For Kalshi, the product represents its first venture beyond event-based binary contracts. For Polymarket, it adds a continuous trading layer to a platform that is operated on a resolution-based model. Both platforms have posted strong numbers heading into the product race. Prediction market transactions hit a record 192 million in March 2026. Kalshi reported monthly crypto trading volumes above $1 billion in March for the first time. And that's based on user-compiled data from Dune Analytics. Kalshi processes more than $100 billion annualized trading volume, while Polymarket reported weekly notional volume above $1 billion through the first quarter of 2026. Kalshi's regulatory standing under the CFTC gives it a structural advantage over offshore platforms. The CFTC chair said that the agency plans to bring perpetual futures under its own oversight, a development that could favor regulated venues. Kalshi also plans to introduce stablecoin collateral for its perpetual products in the second quarter. Betting on bets. It's a derivative. They say it. I mean, they're not hiding it. But let's be very clear what's going on here. I'm not betting on the prediction market itself. Like, let's say that Kalshi's got something like whatever it was I was talking about yesterday. Whether or not more than 15 ships will be able to transit in a single day through the Strait of Hormuz by whatever it is, May the 10th. I don't actually bet yes or no. I bet long or short on that market. How is this not ridiculous? Can somebody please give me a viable argument of why derivatives need to exist in the first place beyond the human beings' need to go gamble away their money? Why can't you just do that in Vegas or Reno or Atlantic City? Is there anything that derivatives offer the markets at large? Derivatives on oil futures contracts. Is there anything about the derivative that does anything to help us figure out how much oil costs? Why is it not, hey, I'm a refinery. I need West Texas Intermediate crude. I'm willing to pay this much money for it per barrel. The person that has West Texas Intermediate calls them back and says, that number's too low. I want $5 a barrel more than what you're offering. The buyer comes back and says, I'll give you $2.35 more, but not $5. And then the deal is made. Why is that not the price of oil? When you multiply that like there's going to be an average of all the refiners talking to all the West Texas Intermediate crude producers, and in there is an aggregate price that I do not need a derivatives for. I posit to you that all derivatives, no matter what they are on, is simply gambling and has no place in active price discovery on any market, anywhere, ever. If somebody can make an argument of why I'm wrong, I need to hear it. It's not that I want to hear it. is that I have to hear it because nobody has ever made a good, solid argument to me as to how derivatives benefit anyone other than the gambler winning money on their bet or jumping off of a bridge because they lost their, I don't know, kids' college fund, whatever. Let's move on before I pop a brain cell. New York sues Coinbase and Gemini over alleged illegal prediction market gambling operations. Micah Zimmerman, Bitcoin Magazine, again. Letitia James, New York Attorney General, has filed lawsuits against Coinbase Financial Markets and Gemini's Titan, alleging that both companies operate illegal gambling platforms through prediction markets available in New York. The lawsuits claim that Coinbase and Gemini allow users to place bets on outcomes of events that includes sporting events, entertainment awards, as well as elections. According to the complaint, these markets function as gambling under New York law because users risk money on uncertain outcomes that are outside of their control. Attorney General James stated that the platforms operate without licenses from the New York State Gaming Commission. The state requires licensing for gambling operations, including mobile sports betting. The lawsuits assert that Coinbase and Gemini have not obtained such approval while offering their products to users in New York. The filing states that users aged 18 to 20 years old can access the platforms. New York law sets 21 as the minimum age for mobile sports betting. The Attorney General's office argues that this access exposes younger users to financial risk and potential harm. The complaints seek court orders requiring the companies to forfeit profits earned from the prediction markets. The state also seeks civil fines equal to 3 times the profits and restitution for affected users. The filing requests restrictions on participation by users under 21 years of age and limits on market practices that reach college campuses. So there you go. Letitia James at it again, this time against Coinbase and Gemini. I mean, if it's the law in New York, it's the law in New York, so she's probably going to win something out of this, but New York just doesn't want anything. They don't want any kind, but between this and the bit license, they just don't want to have anything to do with cryptocurrency. Just let them be like North Korea at night from like a satellite view where all the lights on the night side of, Asia are lit except for that little itty bitty part of North Korea. It's just completely black. I mean, from this standpoint, tend to agree. It's gambling. It's not good for kids. But this really isn't about the children, is it? Because they always say that, we're trying to protect the 18 and 20-year-olds. Okay. But that's not what you care about. What you care about is you're not getting your cut. Organized crime taught you guys in the government how to take your cut. And you're not getting your cut. That's what you care about. You don't give a shit about the kids. Stop blowing smoke up my ass. Sullivan and Cromwell, it's a law firm. And they're apologizing for AI hallucinations in a court filing. Karen Freefeld and Mike Scaracella writing this one for Reuters. Sullivan and Cromwell, a premier Wall Street law firm, apologized to a federal judge. We're sorry, we're so sorry, for submitting a court filing with inaccurate citations and other errors that were generated by AI. In a letter dated April 18th, Andrew Dietrich, co-head of the firm's global restructuring group, said the errors included AI hallucinations, instances in which AI makes up case citations, misquotes the law, or generally generates non-existent legal sources. The mistakes were caught by law firm Boyes, Schiller, Flexner. Dietrich said in a letter to Martin Glenn, that the chief judge of the U.S. Bankruptcy Court in Manhattan, quote, "I apologize on behalf of our entire team. I also called Boise Schiller Flexner LLP on Friday to thank them for bringing this matter to our attention and to apologize directly to them as well," Dietrich wrote. Oh, how nice. Boyce Schiller Flexner is clearly involved in the case. The letter did not say what AI program was used to help produce the court filing. Dietrich and the representative of the firm did not immediately respond to requests for comment. The firm told the judge that it maintains a comprehensive policy and training requirements governing the use of AI tools in legal work that are designed to minimize errors. The letter said that those policies were not followed and that a secondary review process also did not identify the inaccurate citations generated by AI. It later corrected the version. U.S. judges have sanctioned lawyers in dozens of cases after attorneys have used AI for legal research and drafting without fully vetting the results. Lawyers are not prohibited from using AI, but are ethically bound to ensure the accuracy of court submissions. New York-based Sullivan and Cromwell, with more than 900 lawyers, has a reputation as one of the country's top corporate firms, known for mergers and acquisitions work, corporate governance, litigation, and private equity matters. In the New York case, the firm represents foreign representatives involved in the wind down of Prince Global Holdings Limited, a Cambodian conglomerate whose founder and chairman Shin Ji was charged in Brooklyn federal court for allegedly directing forced labor compounds in Cambodia and a massive investment fraud. A representative from Prince Group could not immediately be reached for comment. So AI is freaking everywhere, and it's going to get worse before it gets any better. It is a useful tool. It is. It's like a hammer. It can either be used as a stupid thing or as a precision tool to build something that's going to last generations. The tool isn't at fault. It's the user that is at fault. I can give two different people a hammer and a box of nails and a piece of wood, and one will build something and the other one will come back with a smashed finger or something worse. God only knows. Let me put it to you this way. So over the weekend, my daughter, actually, I think was it Monday? No, it was over the weekend. My daughter was upset because her teacher in English ran a paper that she had written through AI to determine whether or not she used AI. And we still don't know why she did this, but she did it. And of course, the AI returned and said, yeah, some of this stuff is generated by AI. And that's not my daughter's style. I've tried to get her to use AI. She doesn't want to use it. That's another story. I know she didn't do it. And I talked to her about it, and she said, yeah, I used Google to find quotes in reference materials that I'm using in this research paper. I go, okay. And then she took me through it. And basically what she was doing is she's like, she's asking Google, is there any, here's the topic. Can you find me some resources? And then she'd go through and read through the resources and then highlight a quote that she wanted to use to support an argument she was making in her paper. And then she cited those correctly in APA format, which would be like MLA or Chicago Book of Style. It's just a way that you cite your sources. She cited her sources. Somehow or another, the teacher didn't buy it. Next thing I know, I'm sitting with my daughter in front of the teacher at a conference, and I just had to ask the question. I go, okay, well, so tell me what happened. And they told me their version of the story. And then we were able to immediately clear up that my daughter wasn't using Google AI. She was using the Google search engine. And the teacher had thought she used the overview to pull the quotes from. And this was not the case. And if you've been on Google lately, which most of you probably have, you type in damn near anything, and there will be the first thing that comes up is Google's AI overview. You can get rid of that if you type in whatever it is you're going to type in, space, minus AI. I learned that from my daughter, and we were talking about that with her teacher. But it didn't end there, because the person that did this wasn't her teacher of record. It was a student assistant teacher. probably in college, getting a degree in education. I don't know. This is her intern work, whatever, right? So she's not a teenager. She's in her 20s, clearly, but, she's learning the ropes. And she had to learn some ropes from me. Because I look at her and I say, okay, what artificial intelligence product did you use? And she says OpenAI, or she says Grok 0. I just let it go. I go, can you tell me the filter set and the algorithm that Grok 0 uses in order to determine what it needs to determine given your prompt? And she's like, I can't answer that. And I go, I have to look at her, and I'm not being mean. I'm calling balls and strikes here. I say, that's a problem. You're using a tool in a way that you think you know what the results are, but you don't know the underlying technology behind it. And nobody really can. And I understand that. And I told her that. I go, but there's a bigger issue at stake here. And one is that you're using a tool to determine whether or not a student used that same tool. AI. It doesn't matter the model. I'm just saying AI is the tool, right? Whatever flavor of tool that is, I don't care. AI being used to hunt down and search for AI, that's what I'm getting at here. Because they don't want students to use AI to write their papers for them, but they want them to do their own work. And they also get, hey, write the history of Napoleon. I got a paper on Napoleon Bonaparte from the years, I don't know, whatever, like 2 years that he lived, whatever it is, and write the report and then just turn it in without even reading it yourself. I get that part, but they also don't want the student to return erroneous information. And that's actually kind of like one of the bigger things here is like relying on this tool to, give you complete, factual, trustworthy information. Yet this teacher is using the very same tool to find that students that used AI, because clearly AI is going to give them crappy information. Why do you think it's going to give you the correct information, but anybody else a different set of information? And I look at her and I say, this is a power dynamic problem. This is a problem in power dynamics. You're an authority and you get to call it. It works for me, but it won't work for you. And that's an issue. That is an issue. Generally speaking, when you get into stuff like, I don't know, if you're a woman and your boss hits on you and pats you on the ass like back in the 70s, you basically couldn't do a goddamn thing about it. But if a woman did that to a man in a corporate structure, he damn well could do something about it. He probably wouldn't, but he could have. It would have been and the problem was the power dynamic. The same thing with a cop and a citizen. These power dynamics are all over the fucking place. Yet we get into like one of the most inane power dynamics that we can get into: a high school teacher versus a student when it comes to an assignment that gets to get turned in. Now, the power dynamic has got this woman fooled into believing that AI works for her because she's the authority. There's no way it can work for the fucking student. It's going to give them erroneous information, yet she is completely blinded to the fact she's using the same tool and expects different results. It's the very, very, very definition that Einstein used to describe insanity. It's insane to think that it won't work for the kids, but it will work for you because you're just better at it. Or it knows that you're a teacher and, screw the kids. Like the AI gives a shit. This is everywhere. It's in high schools. It's in college. It's in junior high. Here's my recommendation. If you're a teacher out there and you're having problems, thinking about kids using AI, then learn how to use it yourself. Design a class around that and teach it to them. Teach them how to functionally use AI in an ethical way, in a functional way, in a productive way. You know, I don't like the thought of somebody saying, hey, write a report on Napoleon in these for what he did in these 2 years at the Battle of Waterloo or whatever. No, I think that's dumb. That's a horrible way to use AI. Just so you can have something to turn in, fuck you, man, do the work. But that doesn't mean that I can't use AI to get a hold of a whole bunch of information. And then be able to take that information and maybe, I don't know, cross-check it with a regular Google search without AI. And then take what, like if these are, some of these are hallucinations. And then take that and go down to a library and actually get the books that are cited by the AI that said, hey, this is where this information come from. Find the books that you can physically find and check it. And then that way you'll have you'll have a body of work that you can pull from, or a body of research you can pull from to build the paper. This is not an unethical usage of AI. It is a helpful tool. But these guys are literally turning these kids into thinking that, I don't know what, honestly, I was about to say what I think that they're turning into. I don't know what they're turning into, other than, I will say this. Kids are being very confused in school about their teachers' actions, that they can trust AI to give them the answer, but that the children cannot use it to get a correct answer because it's AI. There's no human being on the face of this planet that wouldn't look at that and go, I'm confused. We need to stop confusing our kids and teach them how to use the tools that are alive and walking around today. Otherwise, damage is going to be done. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.